Real estate and construction stakeholders convened in Harare to examine opportunities for enhancing inclusivity for low-income earners, find ways to finance and expand the real estate sector. At the Zimbabwe Real Estate and Construction Summit, stakeholders emphasized the necessity of revising the framework of financial institutions to better align with the existing market demands.
Financial institutions remain crucial to the growth of Zimbabwe's real estate sector. However, small-scale developers continue to face major hurdles in accessing financing. With the Zimbabwe Gold ZiG expected to become the sole currency by 2030, borrowing has become increasingly difficult, leaving many projects stalled due to limited loan accessibility. Zimbabwe has the world's second-largest informal economy after Bolivia, with estimates showing that about 70% of economic activity occurs informally. Experts argue that this effectively renders 70% of the population ineligible for formal credit. Stakeholders, however, stress the need to re-evaluate loan eligibility criteria to better reflect current market dynamics and promote inclusivity in housing finance. In response, the government has launched initiatives such as the National Youth Housing Program, which seeks to empower young people to own homes. The program highlights the importance of public-private partnerships, where the government provides land while the private developers handle the construction to bridge the housing gap and stimulate sector growth.
Government brings in land, the contractor or property developer brings in the finance or the equipment. So coming to these programs now, the receiver or the end user will not pay for the land cost. The person will pay for the development cost, which is going to be charged by the property developer. Meaning to say accessibility is there now.
Stakeholders remain optimistic about unlocking funding through the insurance sector to help address Zimbabwe's housing backlog of over 2 million units and meet the growing demand for affordable housing. This comes against the backdrop of a largely non-functional mortgage market, with the share of banking sector mortgage loans to total gross loans declining to 4.7% in 2024, well below the 13.2% peak recorded in 2017. As an alternative, CBZ Holdings Group Chairman Laxo Zembe suggested that funds held by insurance companies could be channeled into housing development projects as long-term loans, providing a sustainable financing mechanism for the sector.
Here is a youngster, graduate from university, finished his school, maybe at 24, 25 years old, 25 years old. He gets a job, and he then get a policy. He will only want to benefit from that policy maybe when he's 65, when he retires. So the nation has got those resources to invest in houses. We are talking about it.
Although Zimbabwe is confronted with a substantial housing shortage, the establishment of cluster homes has been initiated to confront these difficulties. However, it has been noted by stakeholders that the cluster homes to the north of Samora Machel are mostly vacant. In contrast, banks do not possess enough funds since people favor keeping their money in cash or vaults. According to stakeholders, trust is the crucial component that is lacking.
No amount of incentives will motivate people to take their money from their mattresses and bring it to the bank. Unfortunately, trust cannot be legislated. But we can start changing behaviors in terms of what the community see as how their money is utilized and their ability to access that money.
Zimbuild CEO and President of Zimbabwe Building Contractors Association, Dr. Tinashe Manzungu, says they believe stakeholders can harness investments beyond our borders only if they align with market needs.
The future of the project being maximized to the tune of 30 to 40 years. We are saying 30 years from now, that same building is supposed to be sustainable and also attracting more attention to the next buyer.
As Zimbabwe works towards expanding its real estate and construction sectors, stakeholders are calling for bold reforms within financial institutions and renewed trust in the banking system. With a growing housing deficit and the majority of population excluded from formal credit, the sector's future depends on innovative financing models and collaboration among key players to make home ownership a reality for all. Tavares Buchiwe for ZTN Prime.